So I recently just opened up a swing trading position for Fiverr stock, and in this video I want to go ahead and break down what is my plan for this position, and hopefully in this video there is some utility that is provided. Now, just a quick disclosure, you should only trade and invest in whatever you see value in. And just because I recently passed one of the exams to become a CMT, a chartered market technician, it doesn't mean that I know everything in the market, and that could be completely wrong. Right? So you don't want to just copy me blindly. You should always just trade whatever you see value in. And this is not a buy and sell recommendation. This is simply just my plan with Fiverr stock. And I want to go ahead and, just touch on a couple of reasons why I'm a bit bullish and optimistic, and what is the duration that I plan to hold Fiverr stock. Now, I recently shared a trade idea for those that are exclusive insiders at Push and Profit Research. It was back on July 21st for Reddit stock, and I mentioned how Reddit stock was likely to break out. It had kind of this cup and handle pattern over here forming, and we ended up seeing just a few trading sessions later that Reddit stock just exploded, doing over 45%. Now, did I personally capture the full move? Absolutely not, right? Even when I share trade ideas, I don't buy at the exact bottom and sell at the exact top. I wish that happened for every trade idea that I share, but that's not necessarily the case. But if you did take a trade recently and you didn't sell at the top, but you caught maybe half of the move, still give yourself a pat on the back, because profit is profit. But going back into the idea for Fiverr, right? One of the things I want to mention is that when we're looking at the discounted cash flow model shared by Simply Wall Street, we see that Fiverr stock is actually below its fair value, right? So this means that it's trading at an undervalued price. It's on sale. And you always want to buy things on sale. The same way that you go to the grocery store, and I don't care if you're buying Captain Crunch on sale or if you're buying, I don't know, bananas, right? I don't think, or do bananas go on sale? I don't know. But regardless of whatever you're buying, right, you want to buy it on sale. And currently, Fiverr stock is pretty undervalued. And it goes without noticing, we want to highlight essentially how a lot of analysts on Wall Street, they kind of feel the same way. For example, the bear case model is that in the next 12 months, Fiverr is going to be $25.25. That's the forecast, right? So that's a 10% forecast. The, kind of average forecast is that Fiverr is at least $33.53 by next year. And of course, the bull case is that it's up 100% and it's at $46.20 or $46.20. Now, in this video, I want to go ahead and talk about what my duration is. I don't plan on holding Fiverr for the next 12 months. This is a much shorter swing trade, so definitely not a long hold. Although I do like looking at what the analyst projections are for the next 12 months, because when I see something like this where even the bear case is higher, to me, that's something that is optimistic and something I don't want to overlook. Now, recently we did have JP Morgan, one of the analysts, kind of change their rating for Fiverr. And although they lowered the price target from 33 to 30, they're still pretty optimistic. And one of the things that they were quoted saying is that Fiverr is in the early days of the freelancing market. I want to go ahead and touch on that, kind of talk about the fundamental story of Fiverr and how it kind of relates to what's going on with AI, and why I think this is actually a stock that, despite the disruptions in AI, can still thrive and survive. Now, real quick, I do also want to highlight that when I take these trades, as I mentioned in my previous videos, I like to take an asymmetrical trade. So for example, Fiverr stock, right, even if you were to enter this at $23, right, and let's say the market opens and it's at $23, what I'm looking to do with Fiverr, and of course you could always go on Excel and play with the parameters and look for an asymmetrical trade, adjust your stop losses. So my current stop loss would be at $22.38. That's where my stop loss is. And so I'm actually in a little lower than $23 because I already bought into Fiverr today. But let's just say hypothetically you were to buy into Fiverr because, it closed at $22.91. If you were to buy into Fiverr at $23, maybe it opened up, a few points higher, and you adjusted your position and you were like, okay, my stop loss is $22.38. Where does it take profit? $24.18. So where is that? That's a little bit right around over here, right? And we'll map out how far that is percentage-wise in just a moment. But that's the stop loss, that's the take profit. So essentially, you would be risking 62 cents to make a profit of $1.18 per share. And so that's a risk to reward of almost 2, right? And so in my book, once it's over 1%, that's a asymmetrical trade. Now, ideally, you want something that's closer to 3, but there are times where you'll take something, or I'll take something that has a risk to reward ratio of 2, right? For example, that trade idea that I shared for those exclusively that are insiders at Push and Profit Research, this was not a 1.9 risk to reward ratio. This was a much higher risk to reward ratio, which is why I really liked the idea of Reddit. But not always are you going to identify those high probable or really strong risk to reward ratio trades. And so occasionally I will take something that's close to 2%, and that is still considered an asymmetrical risk. So meaning that the reward outweighs the risk. Now, of course, you would have to adjust the parameters, right? If you were to say, hey, look, I'm a bit riskier, I'll hold on until the low of $21.40. Well, that could potentially change it from an asymmetrical trade. For example, if you were to just say, look, I'll hold this to $21.48. Hey, guess what? That puts you below 1 on a risk to reward ratio, and that's not an asymmetrical trade. So you want to be very careful when you enter your positions and be pretty strategic, right? A lot of people that often are investing or trading, they don't manage their risk, and that's why they end up blowing their account, losing all the money in their portfolio, right? Because even the best fund managers, even people who are managing portfolios, let's think about Warren Buffett, even occasionally he will reduce his risk if something does not make sense. And so, of course, you want to not enter into the market blindly, and that's why my risk to reward ratio was at 22.38, and that's close to a risk to reward ratio of 2. So why do I like Fiverr? Well, before we kind of touch on the fundamental story and the idea of AI, I real quickly just want to use Fibonacci extensions. I'm a big fan of using Fibonacci extensions, and we'll map out the low over here at $20.83 all the way to the high right around over here at $34.13 back to the most recent low, right? And so what I like about Fibonacci extensions is that they often provide areas where you could see potential price targets. And so we could possibly see resistance over here at $23.98. So that's why the swing trade position is not something that's going to be of a long hold. And I'm pretty much just holding in from where I entered in to just nearly 5%. Now, some people may say, Justin, you just showed us a trade that you shared for the insiders that was 45%. Why are you even talking about something that's a 5% trade? You're not always going to hit home runs. And so sometimes you have to look for those small little gains, because those small gains compound, and that's how you could build wealth in your portfolio, right? You don't have to get those home runs, right? They're not always going to present itself. Now, another reason why I like Fiverr is because when we are looking at the volume relative to price, we're currently at this area where there's this kind of low volume node. And when there's this low volume node, that's where the biggest moves come. For example, when we had the earnings where it was a bit of a disappointment, we saw Fiverr stock drop pretty fast around this area. Well, now we're back in this area, and if we continue to see some buying pressure, we could quickly see Fiverr stock push upwards. Of course, the resistance would be likely around over here at $25, but my take profit is much lower, right? It's much lower. Right? If you want to see where my take profit is, it's right over here, $24.18. Now, of course, another thing I like about Fiverr is that it actually looks like a double bottom. Actually, it could be a triple bottom, because we see that once it hits this area over here, we often see buyers step in and say, no, this is just too low. We need to go ahead and buy this up. And we've seen this repeatedly happen, right? We saw Fiverr stock hit these lows over here, then continue go up. Once it hit these lows over here, we had some demand, came back up, and now we're once again retreating to these areas, and we're starting to see signs of some buying taking place. Now, does that mean that it's going to happen again? Absolutely not, right? Stocks don't have to adhere to any squiggly line or pattern here, but it is something that presents kind of this psychological approach of other people looking at the chart and saying, hey, this may be a pattern that repeats itself. But I think that Fiverr is getting beaten down. It recently just had its earnings, and I think it was a little bit too rough with the earnings. I don't think it's something that's going to significantly perform badly, especially because Fiverr is a bit different from a lot of other companies, right? I was very skeptical of Chegg surviving back when ChatGPT came out. Now, if you don't know what Chegg is, I'll go ahead and kind of give you a story, because it's kind of a funny story, right? Especially if you're an OG who went to college, maybe I don't know, like 7 years ago, right? Before ChatGPT. So if you went to college before GPT, you know exactly what Chegg is, right? So Chegg was this online platform where you paid, I don't know how much I paid, maybe it was like $30 a month, I don't remember. And essentially it would help you do your homework. And once GPT came out, right, you could literally see it in real time, right? Once GPT was getting that adoption, we saw Chegg fall down because it got obsolete because of AI. Why the heck would you pay for this service for Chegg when you could literally just ask GPT to do your homework and it's going to do your homework? It will even write your papers, right? Chegg didn't do that. Chegg used to give you examples of other people's papers, and it would help you, just kind of see what other people wrote and then copy it, right? I had a lot of math classes, and so I would just kind of look at, okay, how did they do the formula? Maybe I didn't get it in class. Oh, okay, cool. But Chegg is obsolete because of AI. Now, Fiverr, people are trying to say the same story. Now, of course, if you're looking at this, what happened, this whole run-up in Fiverr, this was just euphoria from the pandemic. We're not looking at that right over here, right? What we're looking at is Fiverr getting beaten down and a lot of investors saying, hey, it's going to become obsolete because of things like ChatGPT, Grok, a lot of these large language models that can do artwork. For example, GPT just recently released version 5. Right? The imaging on it is amazing. You could ask GPT, draw me a banana with an apple in its hand, and it's going to draw you banana and its apple in its hand. So you no longer have to go on a website like Fiverr to commission some artist to draw that for you. You could kind of get by just using AI. However, Fiverr still could thrive because of the creator economy, which is growing. Now, what is a creator economy? That's influencers, right? People who are on YouTube. And something that AI still isn't great at is video and video editing, right? And of course, there's a lot of video editing or, AI kind of dupes that you can make right now, right? I've seen videos of people having Donald Trump say fake stuff. But as far as like editing videos, right? Like actually, doing those, think about Mr. Beast videos, right? AI can't do that. And so Fiverr still has a market for freelancers. And so I don't think it's the same story similar to like what we've seen with some of these other companies that are getting obsolete because of AI. Now, real quick, we made it this far in this video, and if you got some utility, make sure to hit that like button because I know for sure this is not a video that's gonna get a lot of views. So if you could just do me one favor, just make sure to hit that like button as it really will help out with the YouTube algorithm. And oftentimes when I share these, trade ideas that are, slightly different from the mega cap names like Nvidia and Tesla, the video doesn't tend to perform well. So if you could just do me that favor, hit that like button if you haven't done so already, if you got some utility. But ultimately, I'm pretty optimistic for this trade idea for Fiverr, both from a fundamental perspective, a technical perspective, and it still falls in as an asymmetrical risk. It's not the greatest asymmetrical risk, but it is one that's still there. And I am willing to, lose 62 cents per share, but gain $1.18 per share, on this trade idea, especially because it's starting to show that upward momentum. But you guys let me know in the comment section below, do you guys want to see more videos like this, or do you prefer that I just focus on the mega cap names? With that said, before you guys go, also consider checking out what we have over here, which is the institutional playbook, which essentially I have some videos out there where I go deep and delve into what are some of the things I learned in the CMT program on how institutional participants will view the market. So it's completely free. Once you put your email in, you also get automatically updated to my weekly market post insights where I talk about what's going on with the market every single week. So definitely check that out. It's all free, so why not just get the free value? And also check out this video right over here, and I'll see you guys on that next video. Take care, guys.